There's one stock in particular that I got an email across my inbox there from Worth Charting this morning that's become an increasingly larger name over the course of this year. It's up 85% on the year. That would be NVIDIA. We've talked about it ad nauseum from a fundamental standpoint. Love to get your take, because you've really kind of been sitting on your hands on this one, right? Like when you see a parabolic move like that, I'm sure lots of traders like me want to get in there and short it. Why now are you coming out and saying that you think this is the time to kind of get in there and take a shot on the short side?
Sure. For starters, I mean, a heck of a move. We know you see that beautiful head and shoulders bottom, the June low, the October low, the December low. And you also see this move where it's carried. It carries right to, but not above, the year ago highs of March. So you're faltering a bit at a prior well-defined level. But what we know is on December 30th, it was $146.14. And the high just days ago was 280. You're talking about almost a double. And ironically, get this. So the stock to start the year was 146, and it's basically gets up to 280. The price target on Wall Street in the beginning of the year was 203. Now, analysts move their price targets after the stock moves. It's a crazy thing. So the price target of 50 analysts was 203. Guess what it is now? It's 280. So they thought it was going to be worth 203 in the beginning of this year. At the end of the year, now they think it'll be 280 at the end of the year, but the stock's 280 now. Now what do we do? The truth is it's a double. Let's trim some. So the lines, you can draw them this way. You can draw them any way you want, but I think you get a break in trend. You play for 230. Trade it. It's
not unreasonable. I mean, if you look again, you go back and just look at the NVIDIA quarter, folks. I know we're getting a lot of comments about this. Same thing every day. First of all, it's not. But the NVIDIA quarter was fine. It was okay. It was meandering at best. What got people excited is the CEO talking about they are the company for next-gen AI, which, you know what, they may be. Problem, of course, is that's not in the foreseeable future in terms of what it's going to mean for earnings. We're still a little bit of ways from that. So I think people got all hyped up. Microsoft had a similar move. By the way, you hear some of the analyst calls about Microsoft. Today there was actually a bullish call, but people are calling for a slowdown. So this entire move in NVIDIA, not unlike Microsoft, all it is just multiple expansion. So if you're happy with that, if you think this can continue in perpetuity, as Dan would say, have at it. But at a certain point, we've seen significant moves to the downside in this name. And this line suggests we might be on sort of the precipice of another, Dan.
Right, and it's also knowing who you are in the market. I mean, someone who wants to hold for the 5-year AI trade, wonderful. You could go to 1,000. But here's the thing: on a sequencing basis, we know we have a stock that was 105 in the October low. It's trading as high as 280, and the greatest moves of all are punctuated by dips, pullbacks, drawdowns, sell-offs, declines. Forget the nomenclature. Some sort of counter-trend move. Counter-trend moves are normal. They're not bad. In fact, it's in the etymology. They say it's a correction. Well, that word implies what? That something was incorrect before the correction? Of course, it was too steep. It was uncorrected. It was crowded. That's what this is. It's not about valuation. It's not about AI, at least from this analyst's point of view. It's about tactically, can we make a bet that it's come a long way, it's due for one of those words I just used, saying them again: dip, decline, sell-off, correction, pullback. It's due for one of those.
All right, fair enough.
And by the way, Dan, I think nomenclature played safety for the Rams in the 70s. Back to you.
Yeah, fair enough. You guys can Google that one.